Welcome to my channel, everyone. Welcome to my channel. Please like and share. Today we are going to be looking at taxable income. We are going to be looking at taxable income, and we are doing the paper for tax 3761. Tax 3761, the assessment, second assessment. This this question requires us to, it reads as follows. Question 1: calculate the taxable income of 2P Plastic Pty Limited for the 24 year of assessment. It have got 27 marks. So we need to calculate the taxable income of this company. We need to calculate the taxable income. So let's look at the information available to us. 2P Plastic Pty Limited, 2P, is a company that manufactures Tupperware. The financial year ends on the last day of March. The company is a registered value-added tax vendor on the invoice basis, making 100% taxable supplies. The company's manufacturing process has been approved by SARS as a qualifying process of a manufacturer. The company is not a small business corporation as defined as in the Income Tax Act. And why they tell us this is because we need to be providing allowances based on what kind of a company it is. Like this is an actual company, so we are going to use section of the Income Tax Act, and does not apply IFRS 9 for financial reporting purposes. The following information regarding the tax period ending on 31 March 2024 has been provided to you by the tax manager, Michelle Prinsloo. All amounts are exclusive of VAT where applicable, unless specifically indicated otherwise. So we have receipts, accruals, and expenditure and costs. So we will start obviously with the receipts, and our receipts will only have sales and dividend income. So let's see what happens on the sales. We have sales of 4,125,500, and this amount exclude VAT, so we don't need to calculate VAT. We will take the amount as it is and write it. 4,125,500 as it is like that. We'll write it as it is like that. Then the following line item is dividend income. Dividend income, we have 45,680, but there is a note, says note number 1. Let's go and read note number 1 to find out what are we required to do, what is happening with dividends. Dividend income. A South African dividend of 45,680 accrued to 2P on 15 December 2023 from a wholly owned South African subsidiary company. So we know that local dividends are exempt from income tax, so this amount is exempt from paying tax. So write it as it is in the dividend column, in the local dividend column, the local dividend column will write local dividend column will write the amount, that is 4568, and we are going to exempt this because it's an exempt income. So in the exempt income we are going to write the same amount, 45,618 in brackets, so which means we have nil dividends. Yeah, we have got nil dividends. So our gross income is going to be composed of only our sales, which is the 4,125,500 rands. So that is our gross income, So now let's go on the expenditure side. Let's look at the note. It's purchase of raw material. Look, there is no note on the purchase of raw material, so which means we are going to take the amount as it is, 1,345,200 as purchase of raw material. Remember, it's a deduction. One million 345,200. It's a deduction. Purchase of what? Purchase of raw material. As you can see, we deduct the full amount. There is no note to it. And also we see bad debts. There is no note to bad debts. It's 146,200. Bad debts are allowed as a deduction by SARS. So we'll take the full amount since there is no note to them of 146,200. We are going to deduct 146,200. So we go to the next note, which is doubtful debts. Doubtful debts, there is a note number 2. There is an amount. Doubtful debts, there is no amount, just says note number 2. Let's go to note number 2. So note number 2, note number 2, so note number 2, the debtors clerk indicated that the list of doubtful debts amounted to 546,000 and that 32% of the amount of the list of doubtful debts are in arrears for 85 days, while the balance is in arrear for less than 60 days. So we are going to separate this amount into what is in arrear for more than 85 days and what is in arrear for less than 60 days. Let's look at what is more than 85 days. So of the 546,000, 32% is more than 85 days. So we have 174,720, which is more than uh, 85 days. We multiply that by 40%, and we get 60, 69,8880. This is what we get. This is what we get. But remember, we have to combine them. So that's why I put them in this line, because we need to combine with those ones which are less than 60 days. So we are going to say the one which are less 60 days. We are going to say the same amount, 546,000 multiplied by 68%. We get, we're going to get 371 280,000. We multiply that by 25%. 25%. We are going to get 92 820. So we have to add them together and put them on that, in the last column. So we're going to say 69,888 plus 92,820. We get 162 708 turn for all the doubtful debts amount that we are going to deduct. Then let's go to the next line. The next line is legal costs. Legal costs, it have got a note number 3. So we go to note number 3 so that we need to know what that 35,000, what is it for, what legal costs were incurred by the company. Note number 3. Note number 3. An independent contractor doing work for 2P Limited filed a lawsuit against the company for defamation of character. The company incurred legal expenses totaling 35,000 to contest the case and prove the allegation false. So we need to deduct the full amount, 35,000. 35,000 is allowable as a deduction by SARS. Then we go on the next line, patents acquired, 32,000, note number 4. Patent acquired, note number 4. Patent acquired, to be incurred an expense of 32,000 rand in acquiring a patent for the children's lunchbox range, which proved to be highly popular. So reference to the income tax. So this patent, we are going to only get 5%. It's going to be allowed. 32,000 multiplied by 5%. So we are going to deduct 5% of that. What do you get, guys? I'm getting 1,600. So we are going to allow a deduction of 1,600 this tax period. We are going to deduct 1,600. Then we go to the next line, repairs. Next line, guys, it's repairs and maintenance. Let's go, and it's on note number 5. Let's go and Read note number 5. Note number 5 on repairs and maintenance. Repairs and maintenance. Note number 5. Repairs and maintenance. An amount of 110 rand was incurred on painting the entire exterior of the manufacturing building. The building was badly damaged due to extensive rainwater for filtering through the cracks. So this is a repair. Painting. Painting. We are going to allow the full amount. The taxman will allow the full amount. The taxman will allow the full amount of 110,000 rand. So let's go to the next line. The next line is depreciation and assets. The depreciation and assets, we have 243,000, and there is a note number 6. Note number 6. Let's go to note number 6. Note number 6. Note number 6. Note number 6. That's where it gets interesting, guys. That's where it gets interesting. Depreciation, which amounted to 243,000 in respect of the asset below, was calculated and deducted. 2P donated electronic equipment with a total cost of 120,000 to a local school on 1st December 2023 for no consideration. The market value of the equipment was 160,500 on 1 December 2023. The equipment was originally purchased on 1 December 2022. No Section 18A certificate was received for this donation. So this donation is not going to be allowed by SARS because there is no Section 18A that was provided to the company. There is no Section 18A which was provided to the company. So, but this company has already claimed some deductions, some allowances from SARS for this equipment, which means SARS will need to recoup some allowances that were claimed by this company, and they will recoup at the higher. They will recoup that amount at the higher of cost or market value, at the higher of cost or value. So that equipment, as we can see, that equipment was originally purchased for 120, and the market value is 160,500. So SARS will recoup at the market value, which is higher than cost, 160,500. That amount is not going to be deduction, but it's income that must be paid to SARS. 160,500 is to be paid to SARS for the recoupment of the allowances that this company has been actually deducting for the equipment. Now let's continue. Now let's look at the allowance. Let's look into the allowances. I will start with the computer software. I'll start with the computer software. Let's see what happened with the computer software. The company purchased a computer software program on 1 June 2023 for 140,000 rand, including VAT, and brought it into use on the same date, which means we need to provide for allowances using the general binding rule number 7, which allows the following write-off period for assets when applicable. Let's look at it. So So the software is the computer software. When it was purchased for 140,000 including VAT, so we need to remove VAT. We need to remove VAT from the cost. VAT, we need to remove VAT. So we are going to say 140,000 rand multiplied by 100 over 115, 15, so that we get an amount without VAT. We are going to get 121 739. This was the price of the computer software without VAT. Now we need to give an allowance. It was supposed to be allowed over 2 years, so it's divided by 2 multiplied by the number of months this asset was there. It was the 14 months times 10 over 12, so we will get an allowance of 50,725 that we are going to deduct. We are going to deduct that for the computer software. We are going to deduct that. Then we go to the electronic equipment. Okay. There was also that electronic equipment which was donated. We need to claim the allowance until the date it was donated. The cost price is 120,000. So we are going to use the cost price for that equipment. So let's see. Look at it. We're going to use the 120,000. So it's going to be 120,000 divided by the allowances, because we provide over 3 years, divide by 3 times. I'm doing for this year only because this asset I can actually was provided for. It was bought in the previous current year. So in the I can start from the previous. It was by 4 months over 12. So for the previous year, the allowance which was claimed was 13,333. The allowance for the previous year. Now for this current year, because it was bought on 1 December 2022. Let me show you. The machine was bought on 1 December 2022. So from that time, 1 December to end of the financial year, which ended on 2023, March 2023, there were only 4 months. So for that 4 months, they allowed, but it's not, which means it was claimed in the previous year. So we look at what is claimed this year. So we use the same 120,000 divide by 3 times 8 over 12, because the equipment again did not finish the whole year. It was disposed on 1 December 2023, which means also again 4 months, 8 months only, and the last 4 months it has already been disposed. So we are going to get our The amount of the current allowance is 26,667, and this one goes to the last column because this is the amount that we are going to deduct for this current year. For this current year, we are going to allow that. Then we go to the next note. The next note is lease premium and rent. Lease premium and rent, note number 7, 296,000. Lease premium and rent, 296,000. 296,000. My 296,000. Now the lease premium, let's see what happens with the lease premium. Note number 7. Let's go and read the note number 7. Note number 7. Lease premium. To be required extra space to manufacture the best seller, the children's lunchbox range. The company approached Star Pty Limited for additional manufacturing space and signed a lease agreement on 1 August 2023 for a period of 6 years with the option to extend the lease for another 6 years. A monthly rental amount of 22,000 was payable to Star Pty Limited from 1 August 2023. A lease premium of 120,000 was payable on 1 August. So now we will start with rent. So rent, these guys started paying rent from 1 August to 31 March. 1 August to 31 March, which means they were paying 22,000 rent. 22,000 times 8 for 8 months. For 8 months, 22,000 times 8. They will pay, which is 176,000. 170,000 allowed deduction. 176,000, which was allowed is deductions. 176,000, which was allowed is deductions. Then the lease premium. The lease premium, we are told that they paid a lease premium of premium of 120,000, which was payable on 1 August 2023. But the lease is for a period of 6 years with an option to extend for another 6 years. So we are going to add the years. They are going to give us 12 years. So we are going to allocate that amount over 12 years. So we are going to say 120,000 divided by 144 months multiplied by 8. Remember, our year end from 1 August, when the list starts, to 31 March, there is only 8 months. So we are going to calculate the deduction for 8 months. For 8 months on that list. And we are going to get 6667 as the lease payments. Now we need to add everything so that we get the taxable income before donation. We have to add everything. So let's add, guys. Everything. I'm adding. Let's add everything. Let me adding. My taxable income before deduction. It's before donation. Taxable income before donation is 2225233, and the allowable donations is 10% of the taxable income. Is the allowable, is the donation, that is the amount that will be allowed as a donation. 10%, which is 10% of 2225233 equals to 222,523. This is the amount that the 10% that is going to be allowed. The 10% that is going to be allowed as a deduction. And now they paid. Let's go to the donation part. Donation, that line. 2P donated an amount of 275,000 on 1 October 2023 on Smiley Orphanage, and the relevant Section 18A certificate was obtained, which means they donated more than the 10% of the taxable income, but SARS will allow only 10%. So, which means we will allow that the 10% because it's below that amount, and the rest will not be claimed. SARS will only allow 10% as a donation, and from that our taxable income will be income will be 2 million or 2,710. That will be our taxable income. 2,710,000. That will be our taxable income. I hope you have enjoyed this lesson. Please like, share, and subscribe so that we can continue giving you more videos. Please share this video. Thank you.